AstroSwap has launched its DEX. Today, we're going to look at the good, the bad, and the ugly. Yes, the good, the bad, and the ugly. The launch, what's happening on a fundamental level, but also the launch in terms of the token price, has not been that great. We're going to look at it. We're going to look at the anticipation over the next weeks and months. And let's just figure a few things out because we are only playing a game of probabilities and never certainties. And today is a reality check. So if you like today's video, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro, been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on crypto. So let's dive straight in. Full transparency, this is my second video on the launch. My first video, which I decided to redo, was actually before the launch, right? Before the launch, I actually put this together and said, look, AstroSwap, we got this move from the initial DEX offering to the upside. We've had a big correction, a move up to the upside. I was anticipating at least a bit more of a bullish move before the launch, similar to Wagyu. I was expecting it to maybe do more of this and then a bit of a correction, and then on the launch to do, a good movement to the upside. That's what I was anticipating. The market conditions are not great, but with this is not that confident, right? As in buyers versus sellers. And this move to the downside, I was expecting a three-wave move of some sort. So we're going to look into this as well. But overall macro picture this morning, right? This morning, now we've got a bit of hindsight because we've got a bit of price movement because we've had the launch. What I was anticipating, not immediately, but medium term, we're going to talk about this, 89 cents to $1.39. Why? Because markets tend to move in cycles and trends, 1, 2, 3, such as this, bang, ABC, bang. And then typically what follows in some shape or form over time is a wave 3 because markets are always expanding and contracting. It's the normal psychology of buying and selling behavior. However, this is the zone. We're going to talk about this in a second, but this is the reality of what's happened today, right? This is where we were this morning, only like a few hours ago. This was 7 a.m. or so, UK time, around an hour before the launch. We was around here. But on the launch over here, we had a massive sell-off. So I was, had some time to think about this, to go, what is going on? Well, we need to take into account we're playing a zero-sum game. This is a sport, and for it to be a zero-sum game, there needs to be winners and losers, and everyone has the full autonomy to do what they want with their tokens. That's just the nature of the game. It's like a tennis match. There's a winner and there's a loser, and people are playing against each other. People are buying low, selling high, and reading the markets. People have different strategies and everything else, and we have to take that into consideration because we are playing probabilities and never certainties. So the nature of the market is we've had massive buying over here from IDOs. Then it was the open market buying over here. People taking profits over here. That drives the price right the way down, deeper than I was actually anticipating, but it is what it is. I remember buying around here, give or take, back into the market myself. So that's all well and good. But now here, people have their autonomy, right? So we can't control what people are going to do. And I know people are upset. I'm reading the comments. I'm reading my private Telegram group. It is what it is. The price has gone from here on launch. We're expecting this. And talk about disappointment. It's done this. It's like, oh, man, that's not nice. That's like 50, 60, 70% to the downside from around 17, 20 cents down to around 7, 8 cents. But this is the nature of the game. This is the reality check. This is, only invest what you can afford to lose. This is the probabilities, never certainties. This is get risk-free at a 2x, 3x, 4x because anything is possible. And this is the market. This is the game. I don't like it, but it is what it is. This here. Does this mean the project is ruined? Does it mean it's over? Does it mean the fat lady has sung? I go, no. This is short-term voting, and whoever did their massive selling, hey, look, everyone has their agenda, whether it's the people that bought down here, whether it's people that bought down here, or maybe it was someone that bought up here and just got burnt massively and just said, anytime I get to this price, I'm going to sell. It could be a number of things. We don't know. But all we know is there's been a massive sell-off over here on the launch, and that's burnt and it's hurting. It's hurting, right? It's hurting. It's like, oh, my Lord, I put in X amount and so on and so forth. But this is why we have risk management. This is when we're creating this trading philosophy, this mindset of only risk what you can afford to lose, have a portfolio, have, a 3% risk per position. If it's more of an investor mindset, 10, 20% risk of your whole portfolio per position. but you're getting to be risk-free. So now I'm going to do a combination of what I did this morning before this, right? Before this. So no one knew this was going to happen. We did know here that the market was struggling. It was struggling, and there was, the buyers was struggling against the sellers. Is like this fear. This I was expecting some type of correction, much deeper than I was anticipating for such a great project that on a fundamental level. So now to just look at just the ecosystem, right? And we're going to go into what I went over this morning. I'm going to loop over it because it's still the same mindset, because this is short-term voting. Warren Buffett, his mentor, Benjamin Graham, I think it was Benjamin Graham, he said something really, really profound back in the day, right? Back in the day. He said, short-term, the markets are a voting machine, and the votes are placed based on buying and selling behavior. Yeah, you place a vote. If you buy, you're voting up. If you place a sell, you're voting down, right? But ultimately, the weight of a project will show in the price. The weight of the project will show in the price. That means if there's fundamentally a phenomenal project, eventually, whether it's a month, 2 months, 3 months, 6 months, 7 months, it will eventually show in the price. Is that going to be the case with AstroSwap? Hey, look, I don't know. I'm a bit disappointed right now, to be honest. There's another thing as well, just to keep in mind. This is just the nature of projects and APYs, LP farms, and everything else, liquidity pools. So their single staking pool actually started at a ridiculous number, right? But this is normal, right? This is normal. 16 million percent APY. But that's not obviously sustainable, because just not, right? It's just the first 5 people will get some initial strong APYs per block. And then after after an hour, I took a couple of screenshots. This was the first one. The manual one is here, which is APR without the compounding, but with the compounding, it works out to be 16 million percent, right? That was in the first minute. I think I had the time on my original screenshot. But then around an hour later, it's 140%. Why is that? Well, the whole mechanism of these LP rewards is to incentivize people to come in. I was actually anticipating that the rewards would stay higher for longer, because it did with Wagyu. I don't know, the tokenomics might be very different, because Wagyu is an inflationary tokenomic system, and AstroSwap is deflationary. Is that right? Yeah. So Wagyu has a buyback and burn mechanism, and AstroSwap doesn't. So maybe that's part of the equation. I don't know the tokenomics, but within the first hour is a lot lower than I was anticipating. I was expecting at least to stay at 100,000% for maybe a few hours at least, and then maybe 20,000% for a couple of days, and 1,000% for a few days. Maybe they'll kind of, because they can do their own thing in the back end where they double the APYs and kind of incentivize people to stake for liquidity and so on and so forth. But it is what it is, But what we're going to look at today is some of the fundamentals combined with a medium term, because right now, like a few hours, right, is short term, right? And W.D. Gann said it best. He's one of the forefathers of technical analysis back from the 1800s and 1900s. He said the big money is made in the big moves. Big money is made in the big moves. Hodling, whether it's weeks, months, days, years, with Bitcoin, it's years. If you kind of bought in 2017, if you bought in 2015 and you held to the 69,000 high, then that's where the big money is. But these things with the micro caps on a micro time scale happens as well. So now we need to look at the fundamentals. Is there a use case here? Is there a likelihood that we are going to see the price recover and we're going to see all-time new highs? I don't have a crystal ball. We can only do probabilities and never certainties. This is the good, the bad, and the ugly. This is the reality check. This is not, there's no guarantees in the game. And if you want a guarantee, you have to use a different strategy. I have different strategies that is more of a guarantee, but these are high risk, high reward, asymmetrical. You risk 1 to get 100, or you risk 1 to get 10. But that one, you're risking it. That means there's risk. There is risk. And this is a reality check for many people. I'm not liking it. I mean, I'm part of, I'm in the same crowd as you. But we have to now look at the fundamentals, right? Because tokenomics, buying and selling behavior, who's buying and selling behavior. But then, now we're going to look just quickly into the fundamentals, right? So Sunday swap. This was a post done by, what was it? The Cardians. I got it from, I think it was the Twitter post. Yeah. And they just did a top dexes on Cardano who have the most followers on Twitter, right? SundaeSwap by far has the most, right? It's like nearly 300,000. However, SundaeSwap decided to launch directly on the Cardano blockchain layer 1, but they're not ready yet. The throughput volume is slow, so therefore the user experience is slow, and there's a lot of problems. But they decided to get the first mover advantage, and they just did it earlier than AstroSwap by 8 days or so. But they have to now face the consequences of 4 weeks, 6 weeks, 8 weeks until the KEVM is ready on Cardano, which is going to allow the high volume of throughput. It's not going to be a great user experience. So AstroSwap said, okay, look, that's not what we're doing. We are going to use Valis as a layer 2 solution for the Cardano blockchain to give fast swaps. Fast swaps, that's what the Cardano blockchain wants, or the Cardano ecosystem wants. And that's now is a viable, ready, best user experience solution. So the anticipation is on a fundamental level. I have to look at the fundamentals, right? Because the team have done a phenomenal job at building, because look, the price is not a reflection of the project. The price is not a reflection of the project. Everyone is looking to make a profit, but everyone can do what they want to do. And if it goes our way, we're happy. If it doesn't go our way, but we don't have that information in advance, and we can only make the decisions when we're buying. And then what happens is what happens. And what I got taught by my mentors is once you've done all your analysis and your business plan, your trade plan, then there's no more emotional thinking. There's no more thinking to be done other than your trade management. And if it says, I'm going to do an exit over here, we can talk about that in a second. I want to do this over here and do this over here. Then you just execute. But if those targets don't get hit, then you have to have a plan for that. And if you don't plan for the downside, then you have to review and learn from this experience, because I'm listening to the comments, I'm looking at it, and I'm going, okay, look, we just need to look at this. So fundamentally, they built something phenomenal, right? So the Cardano blockchain, there's some issues right now. So AstroSwap has said, we have a partnership with Valas, with Wagyu, with Swaps. We can use the Swaps protocol to do a cross-chain bridge from the Nomi wallet over to the MetaMask wallet onto the Valas blockchain and build on Valas, right? So that in itself is credits where credits due, from a fundamental development team, tech team, vision, solving problems. That's good business practice. And the whole vision is, right, we can get this Cardano ecosystem, give them a solution that they don't currently have, and it will be the best user experience, and we can drive them over and use Valas as a layer 2 solution. That is absolutely key to understand, and that's not a reflection in the price. That's independent from the price. There's two separate things over here going on, and we need to understand that. I know I'm gonna keep looping it because I know what the comments are gonna get today on YouTube, and I know what I got a live workshop in my Telegram group, and I know a lot of individuals are going to be buying AstroSwap and holding AstroSwap and not going to be happy that it's dropped by 50% because they were hoping for the 2-3x on launch. But again, this is the game that we're playing. It's a zero-sum game, and people have autonomy, including you, right? Because you're looking to sell at certain points and everything else. So this is the nature of this market and every market, whether it's stocks and shares, whether it's gold, whether it's Forex, whether it's crypto, whether it's, whatever other market it is, whether it's Bitcoin or Ethereum. We're seeing Bitcoin hit 69,000 and drop all the way down to like 30,000. And we're trying to peg the tops and, sell the buy the bottoms and sell the tops and so on and so forth. So this is what I wrote this morning. And to me, it hasn't changed. It hasn't actually changed, to be honest. Yeah, I was hoping to get to the first target faster, but I was anticipating 2-3 weeks for first target anyway, not 2-3 hours. But we have to look at it. So target 1 is always risk-free. Get risk-free. Medium-term profits, that's more like within 3 months. And then long-term profits, well, in this bull run, I'm seeing it as 6 months, 6-7 months, 6-7 months, May, June, July. I reckon Bitcoin's going to hit that 6-figure mark, and there's going to be a euphoria phase of the market that we haven't seen, similar to the end of 2017, and then we'll take it forward from there. So typically the market moves in 5s and 3s, right? 5s and 3s, and to me it hasn't changed. I'm disappointed with this, but look, what can we do? It's out of our control. We can cry, we can moan, we can shout, we can swear, we can be in disgust, or we can go, look, this is the game that we're playing, and these are the rules. These are, people have tokens. I'm hearing all types of things, whether it's price manipulation, whether it's this, who sold those tokens, who owned those tokens, who sold so aggressively. I go, I don't know. But look, we're playing a game here, and this is why you have a portfolio. And a portfolio means, I'm anticipating 20-30% of my portfolio will produce 80% of the results. 30-40% in the middle are going to do well, break even, and then there's going to be 20-30% that might finish on a loss, right? But overall, as a portfolio is what we're aiming to have as a high, and that's just the nature of the game. So what I'm teaching here and what I'm showing you here is the probabilities that markets tend to move. All markets tend to move in 5s, 1, 2, 3, 4, 5, and then followed by ABC. Even on this macro, right? Okay, we got a bit of an update now on this. So on this micro here, this is important. It's not clear, it's not bullish at all, especially the last while is here. There's not really a clean wave count, so I don't want to force a wave count, but it's kind of like a 5-wave structure. So I was actually anticipating another leg down, because it's typical, like a 5-wave structure followed by a 3-wave and then followed by the next move to the upside, right? That's kind of typically what happens over and over again. If you want to read more about the markets and learn more about the markets, by the way, take my free Elliot Wave Fibonacci Masterclass, because we talk about the 5s and 3s, how to know it and understand the basics and these waves typically repeat themselves. I was actually anticipating a bit of a correction. I was kind of surprised, going, on launch, it's probably going to do this. And then I'm anticipating that. But that's quite common. Is it going to do that? I don't know. We don't know. There's no guarantees here in this game, and that's just the nature of it. But we have got this 1, 2, 3, 4, 5. That's why I anticipate A, B, C with all markets, because fundamentally the project's there is to providing a solution, and people need that solution right now. So when I'm looking at this market, what I'm looking at is I want to be risk-free in the typical wave 3 zone. Wave 3 zone just means, when there's a wave 1, this initial move up, the next wave tends to be, this blue line has a 1.618 of this wave. It's called a Fibonacci golden mean. It's a ratio. It applies in human nature, but it also applies in human psychology and mass herd psychology. So we're looking at over here. This is your risk-free. This is where you're aiming, if you bought down here, you're aiming to be kind of risk-free or totally risk-free up here. There are going to be a lot of people that bought up here, down here, and they'll be 2x up. And clearly they've sold. I don't know if they would have bought down here, up here, but whatever the plan is. But you're getting risk-free. Why? The thinking is you are wrong and it's not going to do what you do, what you're thinking it's going to do, what you're hoping it's going to do, right? So if you're anticipating a 10x, yeah, but you want to go, yeah, but what if it doesn't do a 10x? Okay, where's my best place to get risk-free? So here we're just saying this will be a good place to get risk-free. If it does hit this zone, we'll go into the price zones in a second. Medium term, 2, 3, 4, 5, 6 weeks later, it tends to, this is a typical profit-taking wave 4, and then you typically get a wave 5. And this is what I'm terming as a medium term. Good profit-taking area, but you can kind of decide your plan. But then we have this ABC correction that typically follows after a 1, 2, 3, 4, 5. Really, really important to understand. It's nothing to do with the project. It's just psychology, it's speculation, it's profit-taking. Imagine people that have bought down here and the price is up here. All of a sudden, people are going to be taking profits, including you. And you should be, right? Because you want to protect yourself from the downside. So what do you do during this correction over here, during this correction? Well, if you fundamentally believe in the long-term project, and when I'm talking long-term, I'm talking about 3, 6, 7 months because of the bull run, the way things tend to go, hodl and maximize the APY rewards, whether they average out, some of the pools are still at 2,000, 3,000%. The single staking pools are at a few 100%. You get like 10, 20% extra tokens per month, thereabouts. But, that can count significantly, especially if we're going to see price appreciation. Never guarantees, only probabilities that we do here. So this is what I did this morning before this mini correction, but I just wanted to redo it because I wanted to add the nature of the markets. It's important that we learn. It's important. It's hope for the best, prepare for the worst. That's the whole thing. Right. So up here, right. So what I'm showing you here, markets. I don't care what the currency is, the cryptocurrency. I don't care what the asset is. When there's buying and selling behavior, human psychology, the markets tend to expand and contract. And guess what? Expand and contract in typical ratios of 5s and 3s. That's what the Elliot Wave theory shows. I've been doing it for over 15 years in the Forex markets and now in the last 5 years in the crypto markets, and these patterns show up time and time again. You can watch my videos from Solana back in June, July when we pegged the lows. You can see my Ethereum tops where we said the Doge top. There was just so many that we just pegged the tops and the lows based on 5s and 3s, Fibonacci ratios, momentum indicators. We teach it all in my courses. You get access to my private Telegram. We do workshops on the weekend, but it's also to kind of train yourself up to see what people don't normally see so you can prep yourself and anticipate what's going to happen. But there's never any guarantees. So with this next wave, right? So just to make myself very, very clear, this is where we are right now. Let me just draw this here. Down here, we're like down here right now. Markets tend to move in the initial 5-wave sequence to the up, which then counts as a wave 1. Then a 3-wave sequence to the way down. Then that's a wave 2. But there's a 5 and a 3, right? So we've got a 5-wave structure and a 3-wave structure. That hasn't occurred yet. So we're speculating it. This is what typically happens. But after this correction, when there's profit taking, what tends to happen from this low is then the next wave takes off, right? And typically it's a 1.618 to the upside based on this movement here, which hasn't occurred yet. But this is what I'm referring to as the long term. And here in long term, for my purpose, for this particular bull run, that I believe we're going to see a 6-figure Bitcoin, is the range of $3.58 to $5.34. You might think I'm a madman right now, right? You're like, Jigid, you know what the price is right now? Well, as of this recording, it's like between 7 and 10 cents, right? And it was 22 cents this morning or 20 cents thereabouts. And you're going, Jigid, are you kidding me? Like, who's going to buy this? I go, look, fundamentally, it's a strong project. And what tends to happen is money follows the weight of the project. I think short term people are going to be unhappy, especially people that have been hodling and hoping for a much better performance short term. But look, it's out of the control of anyone. It's a free market, and that's what happens with a free market. And in these current market conditions, it is what it is, right? We can't do anything about that. So this is the longer term. And again, 3 to 6 months. I'm talking May, June, July. May, June, July. So short term, we're looking at here. It could be lower. You might get more conservative now and go, yeah, do you know what? I'm happy being risk-free at 2x. I bought at 25 cents, at 50 cents, bam, I'm risk-free. Or I bought at 12 cents. If it gets to 24 cents, bang, I'm risk-free. Or I bought at 15 cents, at 3x, 45 cents, bam, I'm risk-free. So you get risk-free. So you can tolerate the market movements much easier. It's much less emotional, more mechanical, more objective. That's what we're trying to do, be objective. Because if you've got 10 positions like this or 20 positions like this, you don't want to be on this emotional roller coaster, reacting to the market, reacting to this big sell-off and going, what the heck? And I'm reading people's comments and I'm like, look, you just don't have any control, and you have to accept that fact. You don't have any control. We can't do anything about it. But this is a zero-sum game. This is the game. This is the game. It's the sport. If you don't like playing tennis, you don't like the possibility of losing in tennis, well, don't play tennis, right? This is the game. It is what it is, but that's just the nature of the markets. So then, this is the video I was doing this morning, and it still applies because I got AstroSwap. I go, well, my plan hasn't changed. What you think I'm going to sell at 50, whatever lost? Like, I say, look, I'm happy waiting 2 months, 3 months, 4 months. Wagyu's done a similar thing. It did a nice move to the upside from 20 cents to $3. Then it came right away back down to like 20 cents again, right? And I'm just staking to go, right, we'll tend at some point, if the market does really pick up and the optimism, because, Wagyu's the native DEX for Valas, and it's the fastest DEX, and it's got legs, like the project has got legs. So I go, we should anticipate another wave coming at some point. If it doesn't, it doesn't, but it should be risk-free on Wagyu, because we called that low at 26 cents a while back before the launch of the Wagyu DEX, and it did hit that 2.618 projection which we had for it, and you can look back at the videos. So the price range for risk-free, just based on Fibonacci wave 3 targets, you can get a bit more conservative based on your risk tolerance and your experience and your skill level. 89 cents to $1.39. Medium term, $1.50 to $1.80, which is the wave 5. Again, I'm just speculating here based on the first initial moves, what's most typical and most common. And then this longer term, which is more May, June, July, is more like a $3.58 to a $5.34. So frequently asked questions. This was before, the movement of this morning. I had to redo this video. I had a video done, ready to go. It was a bit more optimistic, to be totally honest, because I was expecting, a bit more bullish behavior based on the APYs, but the APYs just didn't hold for very long. So here's the FAQs, right? I don't know if if you still want to know these, but these have been in the AstroSwap and the swaps Telegram chats, and these are the common questions that were coming up. So I thought, let me just, because I know I'm going to get these in the YouTube comments more often than not. So let me just answer them heads up. So farms, LPs, and single staking pools are only on AstroSwap DEX, only on the Valas chain. So AstroSwap is built on the Valas blockchain, which is the layer 2 solution for Cardano, mainly because it's faster, cheaper, and Cardano hasn't got the throughput volume ready yet. And when it is ready, they're planning to migrate back over. Astro pools on the Binance Smart Chain was just a reward mechanism to reward loyal holders whilst waiting for the DEX, whilst waiting for the decentralized exchange to be built. So to get your double APYs, if you staked before the 31st of October, you can now unstake, and you have to wait 7 days because that's the protocol. And then you have your double APYs, and you can do as you wish with your tokens. Two main bridges for Binance Smart Chain to Valas. It is Swaps. Swaps is the main bridge, but you also have Valas Pad as well. Bridge.valaspad.io. It's from the Valas Pad Launchpad. Pretty easy. Just make sure the Binance Smart Chain is on the left, Valas Pad's or Valas is on the right. Connect your wallet and then select Astro and just click swap, confirm, swap. It does charge you the same as swaps, as far as I'm aware, because I tried it this morning. 0.02 BNB. Cardano via Nami wallet to Valas through swaps only. So it's a true synthetic mint 1-to-1 ratio. So look, this is important, right? Fundamentally, top notch, right? Top notch. I can't fault AstroSwap, swaps team, and everything else. Tokenomics, I think they've done a good job. This is the problem, right? This is the problem. It's a problem. But you're the problem. This is a problem with you, not the project. People are gonna base the success or failure of a project based on the short-term price and how they feel about it, mainly because of the bags that they hold, right? If you hold AstroSwap bags and it's dropped 50%, well, you're not going to be happy. If it's gone up 3x, 5x, 10x, well, you're going to be incredibly happy. And is that a reflection on the project? I go, no. On the development side, what they've done, what swaps have managed to do, again, they're separate from AstroSwap, but they're partnerships, is they've built the world's first Cardano to Valas blockchain bridge, right? Nami wallet, which is native to Cardano, MetaMask wallet, native to Ethereum, but now is EVM compatible for Binance Smart Chain and Valas as well. But it's true synthetic mint one-to-one ratio. Very clever solution that they've provided. So fundamentally, as a project for Cardano token holders that want to trade with ease, with speed, with cheap transaction fees, whilst they're waiting for KEVM to be ready, because no DEX built on layer one solution of Cardano right now is going to be able to do what AstroSwap can do in terms of speed. In terms of tokenomics, in terms of the price right now, the short-term voting, man, is going to be painful for a lot of people. If you bought above 8 cents, if you bought above 15 cents, 20 cents, of course it's going to be painful. And especially if you've been waiting patiently for this launch and hoping right now the price is going to pump just the way Wagyu Swap did and some of the other markets did and other DEXs did. Look, it is what it is. That's why we have risk management, probabilities, never certainties. This is just a reality check. Just, I was gonna say, you gotta check yourself before you wreck yourself. This is just the game that we're in, right? It is, and it has to stay objective. And if you can keep your head cool, calm, collective, because look, what I got taught with my mentors, and I spent tens and tens of thousands of pounds and dollars, and I've traveled the globe learning from different individuals, was the decision that you made at the time of buying is not right or wrong based on the outcome. In other words, this is the logic. People buy, and if the price then goes up, they feel clever and smart. If they buy and then they're anticipating something and it goes down, they don't feel so clever and in fact feel stupid. However, we're playing probabilities. And at the time of buying with the information that you have at hand and your risk tolerance and your risk management, you made the right decision. Well, based on your plan. That's why we anticipate that we are only going to be right a certain amount of the time, and other times the market's going to go against us before it goes our way or doesn't go our way at all. So then you have to be comfortable with losing. Like you have to play tennis, the opportunity to win Wimbledon. Well, you have to also accept the fact there's a possibility that you might lose, right? That's just the name of the game. And we're playing with millions of players, thousands of players, and everyone's trying to win. And everyone has their own agenda, their different plan. They might be looking to sell this token to buy this token because they're looking to do this over there. Maybe they got something going on with their personal life and they want to hold, but they go, look, I got to pay this over here, so I have to sell my tokens because this payment is due tomorrow. There's all these moving parts that we just don't know, but you have to just take it in. But the reason I'm emphasizing this is this short-term price action, if it was the only thing to measure the success or failure of a project, then we'll move towards the project is a failure. But I'll go, that's the wrong thing to do. I'll say the right thing to do is to be much more mechanical and say, look, it's just short-term voting. What's going to happen long-term, we don't know, but the probability is it's probably going to pick up and the price will kind of be reflected. But that's to be seen. All right, AstroSwap is a layer 2 DEX built for Cardano, but on the Valas blockchain. So the Valas is a layer 2 solution for Cardano. Built on Valas to give the best user experience until the Cardano KEVM is ready. The throughput volume is ready. And as far as I can see, and from everything that I've seen, is not ready yet. And from the experience that people are having with the other DEXs built on the native blockchain on the layer 1, it's not fast, it's slow, and it's tedious, and it's not a great user experience. So when people are going to experience AstroSwap on the Valas, they're going to have an amazing experience. So, is that going to be a positive thing on the price? Well, it's only to be seen. All base pairs will be in ADA, so you should see that as well with all the LP tokens. Where VLX is used for the gas because it's built on the Valas blockchain. Very, very important. Last but not least, very high APYs are to incentivize token holders to provide liquidity. So the liquidity pools, is the innovation. Really, one of the big innovators that pushed it forward massively was Uniswap, and people have been just forking that model and using that code to say, look, we don't have enough capital to provide all the liquidity to use the old school order book system, but you can provide liquidity and we're going to share the fees with you. And that's the whole APYs. And to have it as part of their marketing strategy. What DEXs do is they take a certain amount of their tokens. With AstroSwap, they got 10 billion tokens and taken, I think it's 45%. Obviously, not going to issue those 45% overnight. It's going to have to be sustainable long term. Is they incentivize. They say, look, we're going to give you a high APY if you provide liquidity. So then it incentivizes people to come over, provide liquidity, experience the DEX, have a good experience. And if they like it, they stay, they refer, they use it, and it creates more and more volume and so on and so forth. Like with any company looking for customers and customer acquisition. So the very high APYs, we saw that. Are they going to improve over time? Are they going to, because they can double it, they can do what they want to do, just to make sure the customers are coming on board. So there you have it, guys. There it is. It's the reality of the situation. How are you doing? Are you okay? Did it hit your minimum expectations? Are you absolutely disappointed? Are you patient enough to go, look, I understand it's a probability game. It's short term. We don't understand who's selling. Can anything be done about it? I'm reading all the questions, the comments. And this is why I'm redoing the video, because the video that I did this morning was before launch, and it was a bit more optimistic that we were going to see a bit more of a drive and a pump. But look, it is what it is. We can only do probabilities and never certainties. You hear me say it, but the words may not have really sunk in, because words are only words, and it's an intellectual understanding, because you can regurgitate words, but it doesn't mean you actually understand the words. But when you have an experience like this, there's a great quote in a book called Black Box Thinking, and it's literally, beneath every success is a mountain of necessary failure, and failure equals learnings, and you cannot succeed without these kind of experiences, right? So when you have the opportunity to become risk-free at your risk tolerance level, whether it's a 3x, 4x, or a 5x, or a 2x, you have to decide and then just execute that plan. So let's now finish up on, I know today has been an emotional one. I know, the good, the bad, and the ugly, the reality check, it is what it is. So, but this here is the truth, right? This quote here by Benjamin Franklin. Chosen it deliberately, but it is what it is, right? You ready for it? All right. This is all from love. Yeah, it's from love. He or she who is good for making excuses is seldom good for anything else. I know everyone wants to point the finger. I know, but true leaders, they don't look out the window, they look in the mirror. Hey, look, there's only a certain amount of things that we have control over. I'm in the same boat as you. So we only have control over certain things. The market's going to do what the market's going to do. So the best thing you can do in this situation, in my humble opinion, is look in the mirror. What could you have done better? Was there anything? And if there wasn't anything, well, you've done a perfect job. And you played the probabilities, and the probabilities short term. And I'm talking hours right now. I don't know what the time is. What's the time right now? Time is 9:23, so it's an hour and 20 minutes after the launch, right? And I recorded the first video like 6 a.m. That was 9:23, 3 hours after my first video. And I'm like, look in the mirror. What could you have done differently? Did you do it okay? Did you anticipate? Did we have a good case study? Yes. Wagyu. Did we put all the probabilities in our favor? I think so. Did you buy at the optimum price, or did you buy during when there was kind of the hype? There was a hype, obviously, when it was launched, and there was extra hype, and there was a big correction. Is there anything you could do? All right, let's learn from that. But, let me read this one again. I have to emphasize it, because I know I got a live workshop today at 11 a.m., which are people that have bought my course. If you take my masterclass, I got a course. I think we've made it even cheaper now. Elliot Wave Fib, IDOs and launch pads, and I got a few other strategies as well. But if you buy one of my courses, you get an invite to my private Telegram group. We do weekend workshops. We do a few other things live. But here, look, Benjamin Franklin, he or she who is good for making excuses is seldom good for anything else. Now, these excuses and the moaning and the groaning, which is going to come, I know, because I know what people are like. The disappointment is going to come. I get it. I absolutely get it. But then rather than pointing and looking out the window, who can I blame? Like, can I blame AstroSwap? Can I blame Swaps? Can I blame Jagir? Can I blame another guy? Can I blame a friend? Can I blame this person? Can I blame the person that sold? Could I blame whoever, right? There's so many. By the end of the day, you can't impact any of those, and you can't learn from any of those things. All you can do is look in the mirror and go, right, did I follow my plan? Did I have proper risk allocation? Did I actually accept only risk what I can afford to lose? Did I have my exit 1 and exit 2 and exit 3 in play? Was there an opportunity for me to get risk-free, which hit my plan, but I didn't take it? All those things come into account. But then what this allows you to do is to plan your trades, which is the placement of buying tokens, and trade your plan, right? And execute it. And things, however optimistic it might be for a project and bullish, because I was, a lot of projects right now, have delayed. Like Valera DAO have delayed. Dotpad have delayed their launches, and said, look, right now is not optimum time to do an IDO or a launch, right? It's not. It's not. We know it's not. Is that part of the equation that needs to be factored in? Hey, possibly, big time, right? So look, I'm gonna finish on this because I'm almost. I feel for you. I feel for you. I really do. That's why I've been doing this video. Jeez, man, people. I know. We're banking on this to go. Look, 3x, 5x, 10x, get risk free, and then maximize those APYs and get exit 2 and exit 3. We have to take a step back, breathe, look in the mirror and go, could I have done anything better? Could I and would I have done anything differently? Okay, if so, learn from it, document it, bang, so you're gonna be better prepared for your next tennis match. If no, then it's like, right, just keep playing the game, keep playing consistent. So when you have 10 games, you're looking to win 3, 4, 5, 6, 7 out of the 10, and you can afford to lose 3, 4, 5. Does this count as a loss? Well, short term maybe, but medium term, long term, well, that's yet to be seen. I'm still bullish on the project, but I am disappointed in the short term price action. But again, what can we do? Exactly, right? So like, subscribe, hit the button. No, today was a reality check, man. It was for everyone, But it is what it is. But like, subscribe, hit the bell notification. Still upskill yourself. Like really, really, really do. And I'll see you very soon.